Calling computer continuation. Oh shit. Areas where you expect reversal, continuation, or reversal, continuation, and yeah, reversal continuations, um, or mm, reactions. Right. So, the types. First, we will start with order blocks. Order blocks, then breaker blocks. And this is the like order blocks and breaker blocks are like the most effective ones, right? These are the ones I look out for whenever I'm trading. Now, I know a lot of traders out there. I mean, we started what we were. I was actually lied to, but when I started trading SMC, right? I was told the price moves, that supply and demand moves the market and blah 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 blah, But then I kind of like just don't like it. I feel it's all cap. I feel it's cap. I mean, supply is where you buy, is where you supply, you sell at supply, you buy at discount zone, right? Supply and demand. Demand basically is discount. Why supply is the premium, right? So they say that is what moves the market. Price six supply and demand zones, right? That's what was traded back then. But then we later realized that it's actually liquidity that moves the market and not supply and demand. But then, the concept of supply and demand was just didn't really sit well with me, right? So now, since we already understand liquidity now, so order blocks, so the basically times where price would, okay, first thing is what is an order block? Order block is the last the last down or up candle before before a rally or before a movement. Should I use that? Before a rally? Yeah, I think that is my own definition. However, I don't use popular or famous definition for everything, for anything. I use my own definitions of what I understand something as, right? So breaker blocks basically there breaker blocks is the candle, the last, okay, the failed order block, order block, failed order block. However, however, a breaker block is only valid when price breaks it aggressively. Please pay close attention to that. Aggressively, no guesses found. Then this guy doesn't know how to spell aggressively. Is there a mistake here? If there is no mistake, so why the red? Sure. All right. So that's it. So let me give examples. First is right. So the first one is what's wrong with my network? Is it working? No. So for the first example, which is our order block, let's start with the order block. Right. Let's start with the order block. So yeah, the order block. Let me demarcate these. All right. So with order block, right. So the order block basically is the last down a hop candle before a rally. Right. So let's explain that. So let's say we have this candle right here, the green candle. The green candle is okay, let's use the white candle as the white candle would be bullish, right? While the black candle would be bearish rather. The white candle, okay, sorry, let's use the white candle as a bullish candle, while the black candle would be the bearish candle. That makes sense, right? Okay. Mm, all right. So the white candle is the bullish candle, black candle is the bearish candle. The bearish candle comes first, actually. The bearish before the bullish, right? In this case, this is so in an uptrend, we have something like this, right? In an uptrend, this is an uptrend. We have this. So this guy right here is a rally. The bullish, this bullish candle is at a rally, right? You can see price actually rallying up. Price is rallying up here. So now, based on what we know, right? Order blocks is the last down candle or up candle before a rally, right? In this case, now this is the rally. Where is the last down candle? This guy is the last down candle, right? So that is your order block. That is your order block right there. That is your order block. The last down candle before a rally, right? So this is your order block. And this is for bullish. This is when price is actually bullish, right? So what do you expect the price to do? You expect the price to what? Come down into these and continue, right? There are orders here being stacked, right? Basically, orders here stacked up for price to come back into, right? So then you expect the price to come back into it and then move up. This is just a simple definition of it, right? So that is for a bullish, and for a bearish movement, right? Let's identify this as a bullish trend, a bullish trend, right? Now for a bearish trend, for the bearish trend, right? What do we have? For the bearish trend, we have these. We have this. So now the order block, where is now the order block? The last up candle, which is a last bullish candle, right? A up candle. This is a this is a last up candle here, right? Up candle is simply means the bullish candle, right? And the down candle simply means a bearish candle. In this case, right, this is the last down candle, which is the bearish candle. That is our order block. In this case, this is our last up candle, right? That is a bullish candle. You can see it there. Then that is our order block. So what do we expect here now for price towards reverse and continue? So this is a POI. The order block is a POI. Remember I said, however, order the point of interest where you anticipate reversal, continuation, or reactions, right? You can see our price came down here, reacted, then continued. Price came down here, reacted, and continued the trend. There's a bearish trend, there's a bullish trend, right? Order blocks. You can see that the last down candle or the last up candles. I hope you got that. It's pretty simple. Right, so let's move on to breaker blocks. Break blocks. Please, I hope you got that before I proceed. Did we? All right, all right, all right. So let's move on. So breaker blocks basically they're so now in this case now we have let's use a bullish trend now. Let's use a bullish trend. This is a bullish trend now. And before the bullish trend, we have this order block right there coming. Let's clone this. Before the bullish trend, we have this order block right there. Now price is bullish. So apparently now you have this order block marked out for possible reversals, right? So that means you originally anticipate price to come back into it and move in your direction, correct? However, for breaker blocks, now price does this instead. Price comes down. Price comes down to take out this order block instead. Please pay close attention. So price, this order block failed instead, right? And so that means that's going to be a bearish candle. It's going to be a bearish candle. So in this case, this order block failed instead, right? This particular order block, you can see instead of it to hold, it failed instead, right? And then it failed aggressively. So price didn't come here to react to it at all, right? There was no reaction whatsoever, right? It failed aggressively. So now what do you expect price to do? A continuation. Now this other block here that failed now becomes the breaker block. It now becomes a POI for possible continuations, right? So now what is price to do? Come back into the zone and continue. Now this for a sell continuation. Please pay close attention to this. Pay close attention. Now this for a sell continuation. Now we have price worst word here. Let's use the bullish now. Now in this case, we have this other block right here, and we have a bearish candle, right? And we have a bearish candle right here. Apparently, we have bearish candles. So we have bearish candles. I know that this is an order block. You already have it marked out. Expecting price to come back into it. Correct? You're already expecting price to come back into this into this order block here, right? And then sell off, right, in a downtrend. However, price does this instead. Instead of this order block to hold, a bullish candle filled it instead. It failed aggressively instead, right? So now what are you expecting price to do in this case? A continuation, you expect price to now do what? Come back into this order block. This other block now becomes a breakout block. Keep in mind, this other block now becomes a breakout block because price took it out instead of it holding. So now it becomes a breakout block, then this will happen, a continuation of the buys. I hope that was clear enough. Now let's go to a real chart example. So yeah, order blocks, then the breakup blocks. Right, so let's go to the real chart example. Let's use the 4-hour time frame. Now, I'm not going to throw questions. All right. Now, I want you guys to go back to your chart and study it. If for those of you that doesn't know it, right, for some of us who not actually know it. So now I said another block is the last down candle before what? An up movement, right? Before an up, last down candle, last down or up candle, right? Before a rally, right? So now in this scenario now, look at this scenario now. You can see this rally here. This sold. You can see price went down. Video right. You can see price sold off, right? So now where is the last up candle here? This is a bullish candle. Supposed to be the bullish candle. Let's start with this one. The bullish candle, the obvious bullish candle. The last one is obviously this guy here. This guy is a last bullish candle. The last bullish candle, right? Now you can see how price came back into it and reacted, right? You can see, remember when I said we'll have either reactions, continuations, either continuations, reversals, or reactions. And this is a reaction. Price just came back to it, tapped into it, and reacted of it. Now, where is our breaker block? Our breaker block. Now you can see in this scenario now, where is the order block? Where is the last, for this particular rally, this push up now to the upside, where is the order block? This last down candle, correct? Last down candle, right? Now you can see how price pushed it aggressively. You can see how price broke it aggressively, correct? You can see how price broke it aggressively. Then it becomes what? The breaker block that you expect price to come back into. Now you can see how price came back into it. I think I should just use this POI. Right. You can see how price came back into it. Right. You can see how price came back into this order block here. Breaker block rather. This is the order block, the last up candle. This is another order block for this rally here. Right. You can see the last down candle here. You can see how price came back into it. Right. In this scenario again, this is our last up candle for this guy here, right? It's our last down candle. You want to always mark it out. This is our last, for this buy here, this guy right here was our last down candle, right? So you can see price reacted off the breaker instead. Or however, what did I say? Validates the breaker block when we have a solid push, right? An aggressive break. In this case now, you can say that this order block is not valid. Probably if you check the higher time frame, it might be, right? The higher time frame, let's check it out. Check it out. So on the higher time frame, it was obviously broken like aggressively, right? But then on this 4 hour time frame, it wasn't. And you want to focus, you want to believe that the order block will only be valid when price breaks it aggressively, right? You want to believe that, you want to accept that price will only be valid if price breaks it aggressively, right? So now in this case again, for this particular sell, you can see this break, this push down. This is another block. This first one for this particular push here, this is another block. You can see our price came back to it and reacted. Now that's for this sell. This is a last down. This is a last up candle. This one right here is a last up candle that we can see. Order block. You can see that. For this push to the downside, this is the last up candle you can see. You can see our price came back into it. You can try to mark out the whole candle or the actual candle itself. Anyone that works for you. Okay, so let's mark out the whole week, or the candle itself. Right. That's an order block. Right here again, in this case, right, you can see price didn't take out this low aggressively. There was a reaction there, right? It didn't take it out aggressively, so that you actually ignore that as a breaker block. You know the breaker block is not valid, right? So look at this again. We have this order block. This is the last up candle before this sell movement. This particular candle that sold off, right? You know, this is your order block here. The same thing over and over and over every time. Every time, every time. Now, in this case, this is a breaker block. This is another block, right? But it failed, right? So it becomes a breaker block. If you look closely, if I cut price back to you, see that there was actually a reaction. Remember when I said these PO highs are where you expect a reaction, a reversal, continuation, or a reaction. When I say reaction, basically, is when, let's say we have a POI here, right? Then price just comes into it. Now we expect a buy instead, right? But however, price just comes into it, does something, reacts, and then, fails. If you look closely, there was a reaction to this breaker block, right? Then it eventually failed. So that is what a reaction means. So most times your POIs will not be valid. Most times it won't be valid, right? But you probably always get a reaction. In this case, again, you have this is your words order block because it's a last up candle, right? That is that. So I think that should bring us to the end. You can just come back to your chart yourself and start marking out all of these order blocks and the breaker blocks you can see. Now, for this push to the upside, where is your order block? This is a last obvious down candle here. You can see how price came back into it, right? Price from this particular buy here was from a breaker block, but discuss that from the next class. So that will be all for today on order blocks and breaker blocks. So your assignment basically is this: go back to your chart. You can use your U as a chart, whatever time frame it is. Mark out the order blocks and the breaker blocks. Now, when you're studying alone, right, you can mark out the ones that are not valid and the ones that be valid. But when your assignment, I want to see, for you to actually understand it, you have to mark out every other blocks that you can see, every other blocks and every breaker blocks that you can see to really, really understand it and then get familiar with it, right? But when you want to do my assignment, that means you've really understood it, right? You're now familiar with it. I want to see only the ones that were valid. When I say the ones that were valid, the ones that price came back to and gave you a nice reaction to, not just a reaction, a nice continuation or reversal, right? Other blocks or order blocks and the breaker blocks. Thank you very much. Let me check the previous